This is TWiT. Blockchain. Why do I need 200 gigabytes on my hard drive just to get my Bitcoin wallet? Don't say a word. I see that look in your eyes. We've got two blockchain experts on the line, starting with Kevin Quennison. Am I saying that right, Kevin?
It's okay. I'll go with it.
Kennison?
How would you like him to say it, sir?
Quennison is the French way to say it.
Oh, you're French. Quennison. Yeah. All right, like chanson. He is a blockchain expert from Twitter, formerly of Twitter's AI group, Twitter Cortex. Wonderful to have you, Kevin. Thanks for joining us.
Wonderful.
Also with us on the right, here's his book right behind him, Online Danger, How to Protect Yourself and Your Loved Ones from the Evil Side of the Internet, a.k.a. Patrick Norton.
Excuse me?
Eric Cole, Dr. Cole is the author of that book and former, I like this, technical director for the CIA, also served on the Cybersecurity Commission for the former president, President Obama. Great to have you, Eric. Thanks for joining us.
My pleasure.
Nice to see you. I guess we'll go back and forth on this because we have two experts.
Okay.
So I'll let you start, Eric. What the hell is blockchain?
To me, the easiest way to think of it, it's going back to 1995 technology where we're doing peer-to-peer. So instead of having a central server that stores everything, we have hundreds of peers that are all updating information simultaneously. So this way, if you go in and try to hack one or two of them, you won't be able to alter their transactions because the other 200 will have that information and be able to counter it.
Oh, so that makes sense. Like Napster, right?
It's a giant distributed ledger.
Exactly.
Okay. Do you agree, Kevin? Is there anything you would add to that definition?
I think it's a very good way to define it.
Yeah.
I think another way to see blockchain is indeed some security which is put on top of peer-to-peer transactions to ensure that those transactions, let's call them a Bitcoin, is only spent once if you have one Bitcoin, so that you only spend the amount that you do have.
Is that where this all began, was with Bitcoin? Is this Satoshi Nakamoto's invention?
Yep.
So that's pretty clever. Mm-hmm. Do all cryptocurrencies use a form of blockchain? Kevin, go ahead and answer that.
Well, you could certainly say so. I think that's what is today defining the term cryptocurrency. Then there are different variations of what those currencies are. In some cases, we talk of tokens, and tokens, the way they are defined as cryptocurrencies somewhat, are actually built of an existing blockchain technology called Ethereum.
Yeah, Ethereum is a second kind of cryptocurrency that's rapidly, I think it's the number 2 most capitalized. It's rapidly gaining in popularity, partly because of the volatility of Bitcoin, but also because Bitcoin is so slow and so expensive. Is that because, let me ask Eric this, is that because Bitcoin's blockchain is so big that Bitcoin is so slow? And
They're about the mining or like the spending and exchange?
If you want to make a Bitcoin transaction, it could take hours, right? I could go to Burger King and forget the Whopper. I'll be waiting until the Bitcoin cleared. Could be a long, long time. Is that accurate, Eric?
Yes, when you look at the sheer number of systems and how long that blockchain is, imagine when you went to the bank and you were going to deposit money, they had to check with 300 other banks, and all 300 banks had to update the ledgers and then send you that information back.
Yikes.
So in terms of computing power and electrical power that are consumed, in one sense, the thing that makes it secure, which is all of this distributed data, also makes it incredibly inefficient.
Correct. And in my opinion, you have to remember that the real driver of why blockchain is behind cryptocurrency is really for it to be anonymous and untraceable.
Right.
So this way you can do transactions and nobody really knows who's doing the transaction. And to be able to cover it up, you can have cryptocurrency without blockchain, but then it would be regulated and monitored by a government.
You'd have to have a central bank which is basically what we have right now is fiat currencies regulated by a central
Well, if you want to get
bank.
the value out of the blockchain and into something you can spend by a non-blockchain supporting vendor, don't you eventually have to?
Yeah. So let me ask Kevin this then. So, okay, I think we get the idea of blockchain. It's kind of a peer-to-peer ledger system. We see other cryptocurrencies like Ethereum using it. But really, blockchain's become a buzzword. I mentioned Long Island Iced Tea changing their name to Long Island Blockchain. We've seen recording artists use blockchain, I don't understand how, to deliver albums. We've heard about blockchain being used in all these other ways.
Container shipping. I mean,
could you explain that to me, Kevin? And even in AI, what is I don't get it. Talk to me like a fifth grader.
Well, blockchain is in some way a database that record historical transactions in a very secure way.
Okay, I get that. Database, secure transactions. Got that. All right.
So in that way, it is very useful to a lot of use cases that can benefit from historical record of data. So these data could be transactions, like currency transactions, but also if we're thinking about shipping pipelines, it could be that package went from the ship to the truck to something else, to the house, or these fish got fished and then it's an organic fish which is tracked by the government and then verified through blockchain-enabled IoT devices through the trajectory over the supply chain.
That makes sense. So it's a distributed, decentralized, secure database that can store anything a database can store. How do you solve the problem, though, that Eric was just describing of the blockchain getting so big that it gets unwieldy and slow?
Well, so to be clear, the slowness and the expensive aspect of Bitcoin today is not a fundamental requirement for the blockchain technology per se. They are the reason Bitcoin is slow and the reason Bitcoin is expensive to secure. It's a byproduct of the consensus algorithm that Bitcoin utilizes, which is called proof of work. And this proof of work is designed to require people to spend some energy, in that case, electricity, to ensure that the record, historical transaction of record, could not be hacked.
So it's a feature, not a bug, to make it less.
It's a feature, and you already have other blockchains that have other ways to other consensus algorithms, which are not proof of work. So, for instance, in Ethereum, they're finalizing a system called proof of stake. Also, other blockchains called Tezos are already built on proof of stake, where the stake you put is not, in that case, energy or electricity. It is existing coins or tokens or currencies that you do have in the blockchain. So it's some sort of closer to a voting system where people vote with their stake, aka money, in the blockchain.
Let me ask you, Eric, since you focus on cybersecurity, one of the things we know about Bitcoin is how many people have lost money in Bitcoin. In fact, there's another Bitcoin exchange just lost $400 million.
Well, and there's kind of two separate problems. One is people either losing devices.
Well, I lost my wallet. I have 7.85 Bitcoin, but I can't remember my password. That's fairly common.
I have a friend of mine volunteered to crack that for you.
Oh, thank you. Yeah. And then there are brute forcers. I don't know if it'll work with me. And then, but there's also the issue of Bitcoin just disappearing.
Yeah. Another exchange, I think in Japan, got hit for 400 million.
So, Eric, is Bitcoin inherently dangerous?
Yeah. To me, the big problem is it hasn't been out long enough. And if you look in any area, functionality always leads, and then security comes behind it.
Right.
And we just haven't had enough time to really test it. And if you really think of Bitcoin, it's not cyber currency, it's a cyber stock, because the value can fluctuate and change.
Yeah.
If I have $1 in the bank, I'll have $1 in the bank next week.
Right.
If I have a Bitcoin that's worth $1, it could be worth $1 million or it could be worth nothing. So it's not really at a currency point because it can fluctuate and change at will.
So, it's not merely the volatility, it's also the cost of transactions, which has gotten very high thanks to this proof of work system that the original Bitcoin used.
Is blockchain better employed in places other than cryptocurrency? I mean,
maybe. I'm starting to think it might be. How about let's give this one to Kevin.
Well, I mean, there are already incredible use cases of blockchain technology that have been exploding in 2017, which is fundraising. So they've been
ICOs, initial
ICOs
coin
indeed.
offerings.
And this year, ICO, which is fundraising for projects in their ID stage, so pre-product stage, which from a company or startup perspective correspond to the seed or pre-seed funding stage. So ICOs raised more money in 2017 than venture funding or angel investment. So then more money than the traditional ways and mechanism for raising pre-seed or seed money for companies. So it's an incredible change and already a killer feature of the Ethereum blockchain in that case that allowed to define through codes on the blockchain contracts, which defines what the configuration of the fundraising, meaning how much money is given, what is that money turning into, how are the money maybe converted into tokens, how are those tokens distributed over how long of a vesting schedule, for instance. So all those things are done, and they're already disrupting the traditional funding of new companies and allow great ideas and great teams from the whole world to actually get a chance to raise funding, whereas they might otherwise not have that access.
There are risks associated with ICOs, though, because they're not regulated like other funding systems. I know that's both an advantage and a disadvantage. Should average people like me and Patrick stay away from ICOs? Should it be somebody who's really knowledgeable about the field before you plunk down cash?
You know, it's just like the stock market.
Eric, what do you think?
You can lose
ICOs?
Everything. Have a great day. Go play, people.
It is no worse than the stock market, I suppose.
To me, it's like going to Vegas.
Yeah.
If you want to have high risk, high rewards, it's a great area to play. You can make a ton of money, but you can lose a lot.
It's not unsafe, though, or is it?
Define safe.
Well, can you get scammed with an ICO? I think people have, haven't they?
People get scammed with stocks.
They get scammed with everything.
Corner.
Right.
They get scammed at ATMs. They get scammed over the phone.
It's a sexier scam, though. It's a withered, hip, modern scam.
How many fake emails have you gotten this week telling you to send them your information so you can get your tax refund early?
Yeah. I want to talk about AI because this is something Kevin focuses on. What's the relationship, AI, which is also, by the way, another hot buzzword, right? What is the relationship between AI and blockchain? That one really baffles me.
Well, there's something which is often associated with blockchain, the technology, is the idea of not having a central party. So you do not have to trust a bank or such a centralized institution that can be hacked. So everything is decentralized.
Right.
So blockchain as a technology is associated with decentralization, where the whole network in that way belongs to each of the nodes of the network. So there's this equality between the users and the network itself. So some issues that people have been raising with AI is that AI to really shine does require a massive amount of information. And this information, this data is most of the time right now aggregated by large tech companies, so Google, Facebook, and so on. So you have a mechanism, which is a centralization mechanism of data, which makes it harder for new companies to compete in the AI field, since they do not have access to such a large amount of data. Thus, blockchain with this decentralization structure changed the rule of the game a little bit, in that it allows to blend data which could be produced by members of a blockchain and the value which is associated with that data through an economy built on the blockchain. In that case, you could imagine and envision having decentralized data markets that train decentralized AI systems, which by the sheer scale of the network, which is a network where each contributors are incentivized to produce data, manage to reach levels of quality which become able to compete with Google and Facebook and those large tech entities.
Wow. But highly decentralized, and yet blockchain allows them to collaborate, essentially.
Exactly.
So
without requiring to trust a central party, which aggregates these data. The data would be decentralized and owned by everyone in the network.
So blockchain is not cryptocurrency. Blockchain is a decentralized ledger system that allows us to maintain authority across a distributed group. Blockchain is a tool that can be employed in many businesses, essentially to, create a chain of custody, if you will, of either, a Ethereum, either something more ethereal like a stock or a coin or a cryptocurrency, or it could be tied into a tracking device, or knowledge, or a container, assuming you can't spoof the tag on the container or the number on the container, which is a problem with existing technologies. Are we in the middle of a blockchain bubble? Is it just completely out of control?
Look at this, Maersk doing it.
Yeah. Well, there's also banana chain or
pork chop chain.
I mean,
go ahead, answer the question.
I mean, I wouldn't call that a bubble, personally. I'm a believer of a long-term demand for cryptocurrencies, which is somewhat what is correlating with the value of the cryptocurrency market right now, which is expectations towards future demand of those currencies, which will then drive the price up.
Right.
So people do see that blockchain is a technology that can have incredible impact on society at large by removing inefficient organizations, inefficient processes. So supply chain is an example. There's other contracts, legal binding contracts, which could be done in a sort of automated, very cheap way through the blockchain. We're talking, for instance, about also titles of ownership of a house. So those are these fundamental needs, which sometimes, if folks are in a country that doesn't have the chance of a stable government, might not have actual access to a secure solution for storing their title, their ownership of the land, or the ownership of the house. So there's really a broad scale of application of technologies that are unhackable and can sustain time, which sort of in the world of the crypto enthusiast does correlate or does imply a significant higher value that it is even today.
How about you, Eric? Blockchain bubble or legitimate value in the future?
I mean, to me, it does have value, but it's one of the things we love to do is give new names to existing technology.
Yeah.
So the idea of having a peer-to-peer distributed network that can use smaller computers to get the same effect as a large system has been around. We're just giving it a cool name. I do need to call out what my colleague said about unhackable. That is not true. Everything can be hacked. And if you take control of enough peers in that blockchain, it can actually be hacked. To me, it hasn't been out long enough and there hasn't been big enough stakes. But over the next 18 months, you will see more and more attacks against blockchain, and it absolutely can be hacked if you get enough resources. It's very naive to say something's unhackable.
Well, so I meant to say unhackable as an approximation, sure. Bitcoin even itself does not guarantee 100%. An 100% doesn't guarantee 100% the validity of transactions. It's near 100%. So the likelihood the transaction doesn't happen is very, very small. So we're not in absolute terms yet. At an approximation, you can say that the bounty for hacking Bitcoin is its market capitalization.
Right.
So it's hundreds of billions of dollars.
Right.
So in that way,
it's a lot of incentive.
It's something that exactly could be hacked, yet the incentive right now is so high that it's a sort of a good guarantee that people tried, and it might be, if I had to trust one network over the other, I would trust existing technologies and Bitcoin more than others.
Do you think this is something, Eric, that people need to know and understand, that average people need to know and understand, or is it something we can just ignore? I mean, most people don't understand how the, banking system works, or the check clearing works. Is it like that? Is it something that is infrastructure that we don't need to know, or do we really need to understand how blockchain works? Yeah, well.
I don't think they need to take advanced crypto classes, but I do think they need to understand that it is not as stable and it is not regulated like regular currency is today, because a lot of people are getting caught up in the hype.
Right.
And I'm seeing people that are losing a lot of money and getting into a lot of trouble very quickly because they think it's regulated and it's not.
They treat it like the stock market, for instance.
Yeah.
They're getting into speculation and so forth, and that's very risky indeed. I also worry about ICOs. I know there are people who have been taking advantage of it. I look at, though, there's an ICO, this Telegram ICO, where they're trying to raise more than $2 billion. Pavel Durov is trying to raise huge amounts of money for its own cryptocurrency. I'm not going to say one way or the other whether that's a good investment or not, but I think that's just fascinating to watch this happen. Kevin, it sounds like you're pretty bullish on this. Would you invest in Telegram's ICO?
Well, what's very interesting with the ICO phenomenon is that the information is out for people to judge by themselves.
Right.
There's
no gatekeeper.
I wouldn't.
Yeah.
And so there are white papers that explain, well, here's what we're doing, and here's how we expect that network to gain value in the future. So it's very important to read those.
Yeah.
So once you read those, then there are ICO that make more sense than others. I'm really bullish for the more fundamental layers, things like decentralized storage, decentralized compute, custody. You were talking about that, about losing your keys, decentralized exchanges. So all the things that make the value proposition of blockchains and cryptocurrencies today easier to leverage, more secure. That's the sort of the things which I think will have a lot of value in the future than some products built on top, or some ICO sort of companies just turning into blockchain because they are doing peer-to-peer transactions. As was mentioned before, it's less proven that might have long-term value. It's way to be seen. So it's way riskier.
Kevin, thank you so much for joining us. Kevin Kenneson is formerly at Twitter's AI group, Twitter Cortex. It looks like you're at the Polytechnic now. Is that where you are these days?
Well, I'm quit. I left Twitter recently, and I'm now, and I've been excited about. It's been wonderful to spend the time there and to build the AI group. I'm now starting a new company.
Nice.
And around those things we talked about today.
Congratulations.
And I'm excited about that.
That's really cool. Eric Cole, author of Online Danger, How to Protect Yourself and Your Loved Ones from the Evil Side of the Internet. Thank you for joining us today. I appreciate it.
Oh, my pleasure.
I think I'm coming away with a little bit better understanding of the excitement of this and the potential risks. But I think in the general scheme of things, this is very exciting, right?
It's going to be interesting to see where it goes.
Yeah.
You know, I'm curious where it goes.
I feel like this is the future.
There are many futures.
There are many futures, and we all
futures.
live in one version or another of them.
In 10 years, we may be swapping welding for, food from Eureka County. Who knows?
Who knows?
Where it's all going to end up.
Thank you, Kevin. Thank you, Eric. And thank you. I hope that you come away with a little bit of an understanding, a little more of an understanding of what all these terms are that are being bandied about.